When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron. Hello and welcome to Moving Iron Podcast. Marcus with Shawn Hackett. This edition of Moving Iron Podcast is brought to you by Ag Direct. No matter how you buy your ag equipment from a dealer, auction, or private seller, Ag Direct finances. Built for agriculture and powered by Farm Credit, Ag Direct offers competitive rates and the most ag-friendly terms in the business. Ask your dealer for Ag Direct or apply online at agdirect.com. Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. And this podcast is powered by Randall Riley. All right, guys, Shawn Hackett here from Hackett Financial out of Boca Raton, Florida. He's nice enough to come on and talk about what's happening in the marketplace. Shawn, how you doing, bud?
I'm doing pretty good, Casey. Doing pretty good here in very, very chilly Indiana, Siberia. And, looks like it'll be pretty chilly through Friday. And then I finally get home to Rainforest, Florida at 82. So
a little bit of the extremes come with come pounding, right? They had you weren't kidding about this weather pattern that you've been talking about for a while, that this mild start to winter and then man just come in and rip your face off winter conditions that we saw. So we started this pattern probably Wednesday or Thursday last week, and it's usually when this kind of stuff comes through, we don't see it last as long as we've seen it here and get as far south as we've seen it get. I was watching the Weather Channel the other day while I was eating breakfast at the hotel, and they were talking about guys in Mississippi, and it's 11 degrees in Mississippi, and that's might as well be negative 22 down there.
Tallahassee, where my daughter goes to school at FSU, 24 degrees, which is pretty chilly for the Panhandle of Florida. So.
Yeah, so this weather pattern that you've talked about is really impacting a lot of things. Travel was crazy last week when you start looking at air travel and those kind of things, and you start looking at all the other things that came along with it. The amount of snow that came out of the storm too was another. With the cold air the way it was, you typically don't see this kind of snow come out of
many areas. Especially in more of the easterly areas, had more snow in the last week than they had the entire winter last year. So that's the good news.
Right.
The bad news is that after a brief pause later this month, a little warm up, kind of a recharging of the atmosphere, we're currently immersed in another sudden stratospheric warming event like we discussed we were in mid-December. And what happens when you get multiple SSW events back to back, they become cumulative in nature, which means the onset of another cold snap after a second or tertiary SSW event become more severe in terms of cold, more severe in terms of snow, and the duration also lasts longer. So we think probably sometime by later in the first week of February, we could be having a more extreme event that will probably last the rest of the month of February and carry on into mid-March before we might get a reprieve. So as much as this warm up that's coming is going to be appreciated by many. It's really just a bump in the road to an ongoing extreme winter from from January through March, despite a very warm December, and that means our heating degree days are going to be top 5 for the winter. And obviously our demand for natural gas and especially heating oil, because we think that this next round that's coming in February is going to be really nasty for the Northeast, where the heating oil market just goes crazy, because that's how they keep themselves warm up there, is with the heating oil and diesel and such forth. So it's and of course, remember, this is going to parlay into a fall spring, which is a brief fall spring in April that leads to a elevated risk for a late planting season hard freeze here in the first half of May. This is, as we've talked about before, probably our highest probability year for something like that in many, many decades. So it's the nature of this weather volatility period that we've entered into, this Marginal jet stream that's a result of the sun going quiet and this polar vortex continuing to get destabilized, where pieces of that polar vortex come down and pay a visit in places it ought not to be. So
right. Yeah, it's very. I've talked to 2 different people now. I was in Milwaukee on Monday, and they got, I don't know how, almost 2 feet of snow out of one storm up until they had 0 on the ground. And then they had a friend of mine that lives in Des Moines had 3 big storms come through there. One was a snow squall, but the other 2 were playing, and I want to say they got a couple feet of snow as well. So
how many times did they ever cancel an NFL game? And they canceled the Buffalo Bills game by 1 day. I mean, they never cancel football. They play no matter what. Right. And they canceled the game because nobody could travel. So
yeah, it was crazy.
For the NFL not to play, I don't know what else to say.
Yeah, it was very very unique, for sure, to say the least there. So, all right, Shawn, let's talk about this. We got a couple of questions that came in from listeners. This one came from Wheat King 01 on YouTube. I need some good news here, Mr. Hackett. How long until the biodiesel demand starts kicking in for our demand for soy oil, and in his case, canola?
Well, I don't really, with the EPA last June came out with a bombshell disappointment, where they backed away from aggressive subsidy mandated targets that everyone thought they were going to be more aggressive with. And from that moment forward, the bean oil market fell out of bed price-wise, and everyone's expectations for biodiesel, the demand for biodiesel and such forth and so on, was calibrated down. And you're just not going to get any headway until the elections are done, right? I mean, who are we going to have new? Are we going to change this policy while we have an election less than a year away? No. So I'm not. Look, plants that are going to go up, that have them, that can produce biodiesel within the mandate, or produce it for California, who's willing to pay a high enough price. I mean, that demand is there, but a demand-driven bump up this year until after the election. Now, if the Biden administration, or if someone from that administration is the president, obviously I think they'll push pedal to the metal, because they're very much supportive for the green economy. If Trump or somebody in that sphere, whoever the president might be, they're less on board with that kind of thing. So it's hard to say right now. But suffice to say, I don't think we're going to see anything exciting for the demand for renewable diesel and bean oil for 2024, other than what's already been baked in the cake. It's not necessarily bearish, by the way, given where oil prices are, but I don't see a fresh, new, exciting, bullish kicker. Remember, with the EPA decision, it was a 3-year decision, unless they want to revisit it, and that was made a year ago. So it's out there post 2024 that we could see some renewed excitement over maybe changes in that policy. In fact, I'm hearing more talk that they're going to make jet fuel out of ethanol more so than that of biodiesel now. I mean, it looks to me like the push is that the ethanol is going to be that they're really pushing for more, use the ethanol to make jet fuel. In fact, a lot of the airline companies are kind of putting a lot of money into the idea that they were going to go down this ethanol route. So it's a pretty murky situation in terms of what it means for soybean demand, bean oil demand, the crush. I really think at this point you have to be fairly agnostic about it and just accept the demand that we know and let the political chips fall as we get through the election. And then once that happens, I think things will clear up very, very quickly about where we stand with all of this alternative diesel and energy sector post-election. So,
Right on. Okay. All right. Next one is from Hill Country 11. With the financial problems in the banks and the lack of profitability at the present prices, what does Shawn think about the amount of planted acres there will be, and if some acres won't be planted due to banks or even farmer hesitation?
well, remember we're about to set the reference price for insurance policies here in the month of February. If prices stay where they're at, and we print current reference prices where we are right now, you're not going to plant marginal acres with that kind of a protective veil at this point, given the high prices we've had the last few years. It doesn't mean that the core acres won't get planted. The core acres will always get planted. If you put in hydrous down, it's a core acres. You know, you're in the business of growing grain, but clearly, are you going to be planting the corners, the less ideal ground? Are the banks going to fund those kinds of marginal acres? The absolutely positively not going to do that. And especially if we have some kind of a disruptive planting season where we have some kind of a frost, replantings are not going to be met very, very kindly by banks who have to fork out more money to go replant. So the answer to the question is core acres are always going to get in the ground, but we're certainly not going to plant that extra marginal acre. And so that's going to definitely bring the numbers down on both corn and soybeans from what they were last year, if these reference prices get printed in February where they are now in corn, in our opinion.
Okay, makes sense. All right, you've talked about natural gas on the last 3 podcasts. Let's spend a little time talking about natural gas and what you see happening there. So when you're looking at the overall spectrum, what we saw here. So just quick history here. So we're back down to pre-COVID levels of natural gas right now, and if you are actually lower than pre-COVID areas. So when you're looking at the way things went, huge spike up, run up to over $10, come back down. We're sitting where we're at now. We have this massive winter storm that came through that's going to require a lot of people to use natural gas and heating oil, like you talked about earlier, to go that. Are we getting ready to see a huge spike up in natural gas? I mean, something that's going to double or triple the price of natural gas over the course of the next 3 to 6 months?
Let's go back to where we started, right? Remember that we had prices go down to those COVID levels in 2020. Production got hurt. Very, very hot summer. Psycho hurricane season in the Gulf. Everybody worried that we were going to run out. Remember, because supplies got low. Yep. And then the Russia invasion.
Right.
And then we had a blowtorch winter last year. Just blowtorch on both sides of the aisle. And that allowed the increased production from $10 natural gas to do its magic. And so we started with extremely low inventories. We ended the winter last year with extremely high inventories. This summer was not particularly hot overall. Let's put it this way. It wasn't as hot as it had been the prior couple of summers. It was warm in a lot of areas, but overall it was not the hottest summer we've had. A lot of the hydroelectric electricity that was offline those prior years because of the drought out west were operating last year, which also took a little edge off. And then we had a very, very warm start here in the fourth quarter, blowtorch December. So we went into the season well above 5-year average natural gas. And so everybody got bared up and said, no hope, no future. And now we've entered the winter. That started really the first week of January, and our work says it's going to last at least through mid-March, and it's going to be a top 5 cold winter, and demand is going to be, dramatically dramatically higher than it was last year. Here and over in Europe, they've been also having a very cold winter. So when we end this winter, we view the end of winter, the end of March. Okay, when we end this winter, we believe our inventories are going to be well below the 5-year average. The problem is La Nina is coming back, and that means we're going to have a much, much hotter summer here in the U.S. We're going to have drought conditions start to return to the central north, central west, central northwest, which is going to start to impact hydro. We're expecting a hyperactive Gulf of Mexico hurricane season coming up. We know what happens when we get too much activity in the Gulf. They send all the crews home who are drilling out in the deep waters there of the Gulf. And of course, we have the issue with the LNG facilities and all that sort of thing. So and then of course we're expecting the winter next year, or the winter that's coming, to start early. So when you run all that math through, Casey, look, we're not going to run out of natural gas this winter, but we could be in a very, very precarious situation come the fourth quarter of this coming year. And so there's a possibility that we could find ourselves in a similar type of supply demand mismatch as we saw coming out of COVID, and find ourselves right back where we started, wondering if we're going to be able to make everything work again. So I really think that those that are in need of physical natural gas, propane, I just nitrogen-based fertilizers. I just think that you're going to look back at this period of low prices, and if you don't do something to lock in these physical prices, I think you're going to you'll be forever wishing that you had. I mean, we had that one gift during COVID that I personally did not think we'd ever see again. A shame on me for saying that. And now we have a second shot at the apple. But I just think that if you're thinking this through logically, through the long-term business plan and any business plan, these kinds of economic prices for natural gas and natural gas derivatives, with the scenario I just played out and the scenario playing out going forward, it just makes too much sense not to take full advantage of that opportunity. And we always talk about this in our presentations, that weather volatility means there's upside volatility and there's downside volatility, meaning both sides get a chance to do something smart, either selling the crop or buying your input. Right now, we're getting a really exciting opportunity on natural gas derivative prices on the buy side for physical inventory. So that's the scenario. And while we've had this initial run up in natural gas and a little give back here, if we're correct about February being colder, longer, and snowier, especially in the eastern half of the country, natural gas prices are not done pricing in a much, much tighter reality than the reality they've been pricing due to the warm December and the blowtorch winter from last year.
All right, lastly, let's finish up with China. Let's talk about China here a little bit. There is this fear that China is on full bore implosion. Stock market's crashing. They've been fighting their version of the 2008 crisis for the past 6 or 7 months. There's this impending, looming issue with Taiwan, especially with the new president that came in. He made it pretty clear that they're going to do things. They're not part of China. He said that, and we're going to continue to be like that. So you guys back off with that whole idea. And so a lot of things going on with China. A lot of people are running from what's happening with China with, I guess, like you talked about, we started that there could be another Chinese embargo type deal, trade war, those kind of things, if something like this does continue to happen. So I guess, Shawn, talk about your perspective, what you see happening in China right now, and some of the wheels that are turning that could greatly change what we see happening in the commodity market right now.
Well, remember, fear does not equal reality necessarily.
Exactly. Right.
Fear is a worry over what might become reality. So clearly, I mean, the Chinese stock market, look at the Hang Seng Hong Kong index collapsing. You look at the China 300 stock index. It's at the low. It's lower than it was during COVID. Obviously the real estate market there has been imploding. like it was here in 0809. It's a very much a similar kind of a great financial crisis for China specifically. It doesn't necessarily mean it's a great financial crisis for the United States, by the way, but it means that the fear is that because of that, the demand for commodities, especially those commodities that are very much dependent upon Chinese demand, like soybeans, like crude oil, like cotton, certain things that they're heavily, um, without them, there is really no market for those markets have no business being where they're at. So there's a big fear factor that is now starting to create a cascade of selling. And the more people sell, the more people want to sell. And the more people want to sell, the more other people want to. It's a self-fulfilling prophecy, and you get into this tailspin capitulation. We're in a panic over China's economy. They just came out with their numbers. Who knows if you can believe them or not? But they didn't look very good. And of course they're going into their New Year's holiday. So by definition, they'll always have poor demand this time of the year because the whole country shuts down pretty much, and they go on vacation for a while, for a few weeks. In addition, they had these elections in Taiwan, and a very pro-independent leader was elected that does not like, because he wants to promote independence. He does not want to promote integration of Taiwan with China. We came out, and many leaders in the West came out and supported this guy, that we're willing to work with him as an independent government. So, and obviously some very, very nasty language that came from the Chinese Secretary of State, is now putting additional fears that there's going to be an imminent invasion of Taiwan by China and an escalation of tensions between China and the U.S. and the West, and a new trade war like what occurred when Trump was president is going to be kicked off. And of course, we know that one of the areas most impacted by something like that would be the grain markets, especially the soybean market. So, wow, you got two incredible, fearful scenarios working together, side to side, hand in hand, and heart to heart, to create some very panicky trade in commodities and in especially the grain markets. And so, no one can say, Casey, how much longer that kind of capitulation will go on. What we do know is when you start going straight down in any market, you're closer to the end than you are to the beginning. Okay. Now, it doesn't mean you can't still fall another $1 in soybeans, by the way, before it's all over. Right. But when you start, it's like when you go up or straight down. When you start to do that, which we are now doing, you're closer to the end than you are to the beginning. Typically, how these things end or how they turn around is China needs to do something to instill confidence. What did we do during a great financial crisis? The government said we're going to spend $1 billion or $1 trillion, and the Federal Reserve said we'll print as much money as we need to reflate the system, and we came out of it, and the rest is history, right?
Right.
Well, China needs to do the same thing. They need to do something to instill confidence, to instill that they are doing what is necessary, whether it's fiscal spending, whether it's money printing, and they've been doing so up to this point, Casey. They've been doing these little baby steps. We did the same thing in 08. We tried to do little band-aids. When you have a ship that's sinking like this, a big ship sinking like this, band-aids are going to get ripped off every time, and they have been getting ripped off. I mean, it's not going to work. You need to do something big, bold, aggressive, a blunted instrument. You have to shock the market with, wow, what was that? And you have to bring confidence back that the Chinese ship, that the bilge pump is working, and the water is receding, and the ship is levitating back above water. And until they do that, we're going to be in a panic. And that's how all panics end, is something has to change. Some policy has to change with the country and the government in trouble to instill confidence. I have no doubt that they will do that. They act differently than we do. They act slower than we do. They're not as impulsive as we are. But they have shown throughout history that they will swing the big stick if need be. So I think that's what we need to be on the lookout for, Casey. Right now, we have speculators record short in the grain complex as a percentage of open interest, or near record short, or in some cases, they are record short. That in itself doesn't mean that the market has to bottom today or tomorrow or next week, but it says that we have everyone fully convinced that there is absolutely no way that the grain markets can ever rally again, ever, for the rest of our lives. It's going down forever. That's a very dangerous place to be psychologically in any market, is when everyone believes the same thing, that there can be no other alternative price path. So when everyone is leaning on one side of the ship, we need to be very mindful that as ugly and as bearish and as negative and as hard it is to see anything that will turn this around anytime soon, that is in fact exactly what is about to turn. And when it does turn, Casey, as all these panics always do turn, when it does turn, the turn is so fast, it's so abrupt, it's so surprising, it's so shocking, and the short covering rally is so spectacular that by the time you turn your head through, one back to the right and to the left, the amount of price increases that we could see could be quite startling. And what oftentimes is the case in these instances, farmers that are currently panic selling, and I understand why they are panic selling, because they didn't, they need to, the bank's forcing them to, they have bills to pay. They didn't, sell when they were supposed to, or when they should have, all those reasons. And I understand it, but typically you'll find that farmers that sold during this kind of panic will look back and see that they locked themselves into a whole horrible year for farm income, when prices mean revert and we actually get the better prices that farmers can sell, and turn what looks to be a morbidly awful year into a year that could be respectable. And that seems to me where we're heading, and what we need to be mindful of. And don't get me wrong, if you have to sell, you have to sell. I mean, if your banker's saying you have to sell, I understand that. But I certainly would try to do everything that I could not to panic in this environment, unless you have to. And if you find yourself that you have to do something, I certainly would try to do anything that I could and try to do something to try to participate in upside price risks that we think are, likely to come as we move forward into the year and we start seeing some of these other factors shift sentiment. We always say that if you go from pitch black to just black, meaning if right now we're at pitch black, sentiment wise, pitch black. If you just go from pitch black to black in any market, whether it's the stock market, the real estate market, if you just get a small shift from pitch black to just black, the change in the prices of that change in sentiment can be eye-popping. And I've seen it happen over and over and over, time and time again. Just a subtle shift, and you get a disproportionate shift in the pricing of the assets that are being aggressively sold in a panic. So, so I don't have any great news today to say that I know for sure tomorrow's the day, but I'm just trying to lay out the historical experience of panics, my 35 years of watching markets and grain markets and commodity markets. That typically these are the times to do your very, very best to be patient and to understand how markets work, and how greed and fear are always at work in our markets, especially highly leveraged futures markets, where most of the positions are leveraged, sometimes 10-1 in some aggressive speculative strategies. And if you're 10-1 leveraged and you get a little bit of market going against you, you have to cover in a hurry. And that's the nature of leverage. And any time that you're involved in markets where there's leverage, you have the ability for overshoots and reversions to the mean. So it's probably not necessarily going to make anyone who's listening to this show click their heels and run down to the bank and tell them how good they see the future. But I also want to try to put things in perspective, that I don't think this is that this is going to. I don't believe that when we look back at the end of the year, that the beginning of the year, as bad as it looks, is how we're going to end the year. I think we're going to end the year on a much better footing than we started it. And we'll look back and say, that overall the year provided plenty of good opportunities for farmers to make sales at levels that allowed them to have a year that was, that was at least respectable, instead of what we're seeing now, which is, something that is very, very, depressing and despondent at the moment. So,
right on. Okay. What could possibly go wrong when you're leveraged 10 times over? You know what I mean?
It sounds like a sound strategy to me.
Yeah, exactly. Right on. All right, Shawn, good stuff as usual. Folks want to reach out to you and get more information about what you're doing over at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett advisors.com. We have a Twitter page at Faradix11. We also have a LinkedIn page. From time to time, we put out stuff on our weather cycles and our statistics and correlations, and how we look at the world in agriculture to see if how we do things in the usual way that we do things, and how we price forecasts for farmers might be of value to those watching your show.
Right on. And you're out on your speaking tour now, and so you're a pretty hot commodity right now when it comes to speaking, it seems like. If folks want to hire you to be a speaker, what's the easiest way to do that?
Our booking agent is the Tiller Group. It's on our website as well if you want to see it. Okay. It's agspeakersnetwork.com, I believe, is the website that you go to. It's the Tiller Group. You can give them a call, or actually go on the website and send them an email and talk to them and work on the logistics of getting us to come to your location, and how we're going to do that, and when we're going to do that, and where we're going to do that, all that sort of thing. So that's the best way if you're interested in having me come out and talk about our weather work and our unique way of doing things. That would be the best way to get us to come out and speak to your group as we go into what I think is going to be an extremely important couple of years coming up, with weather, geopolitics, currencies, and interest rates all coming together to create some pretty wild price swings that we want to make sure our customers and our producers take full advantage of.
Right on. Well, Shawn, appreciate you, man. Podcast, man. Safe travels on your way back to Florida.
Will do, Casey. Thank you so much.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Go to Moving Iron Podcast on the YouTube channel where you can see it here, plus Snapchat and what's the other one called? TikTok. Get that one too on Moving Iron at Moving Iron Podcast as well. Go to movingironllc.com for everything Moving Iron related. Moving Iron Summit's coming up here in Nashville, Tennessee, November 4th through the 6th. Shawn's going to be there giving a couple speeches at some breakout sessions there, talking about what's going on. So looking forward to that. So Shawn, appreciate you, man. With that, I'm Casey Seymour, Shawn Hackett. Smooth Smart, folks. Out.
Moving iron in the 21st century. Hard work.